All right. Good afternoon, KW Prosperity. Hope you're doing well. I am here with Mary Beth and Shane Force to have a little conversation about mortgages. I guess the first place to start, Shane, is just tell us what your world is like right now. Talk to us about what you've experienced this week.
Well, I've never looked at my ticker as far as what the market is doing more than I do now. It's incredible, and I just kind of minimized it to get it out of the way for the next 20 minutes. But it's incredible. We've had a good week, thank God, of rates kind of staying level. The Federal Reserve is putting a lot more money into buying mortgage-backed securities than they thought they were going to have to do. But I'm watching the market so much more than I ever did, and maybe because I'm home and I'm not out at offices as much and talking to people as much as I normally am. But things are changing like every day as far as property inspection waivers. That's been a great thing that we should probably talk about. Pricing and the market not having liquidity, and some lenders just saying that's it. We have too much. We can't do anymore. Just I'm doing a lot of reading of articles too that our CFO and CEO are kind of letting us know how it's going to affect us. And it seems like it affects us within 48 hours once they give us an article. It's crazy, but we're getting deals done. There, you've got to be a little more creative on how to close loans these days, but we're doing it.
Just to circle back, do you want to talk about the property inspection waiver first? And then I'd love to also hear about some of the creative ways that you've had to, maneuver your business this week.
Yeah.
And
So
Matt, Shane, also, if we could, I love that you're a student of the market, and we're really encouraging our agents to do the same, to just kind of keep a ticker on that market. So
yeah.
we have a real time, because yesterday is not today, is not tomorrow.
Yeah.
If you could kind of just give what have you gathered from all of your reading
Yeah.
as of today?
Yeah. It's incredible how the Federal Reserve has tried to get control of this. And last week, I would say that the market was still out of control based on everything that they were trying to do. And now they've gotten control of the market. But now mortgage companies, because of what's disrupting everything right now today, is this bill that I think has not been passed yet, that is going to give homeowners 6 to 12 months reprieve on their mortgage, which sounds all good and great. But as soon as I heard about that, I said to my wife, this is going to cause issues. Like, I can tell you right now, this is going to cause issues on our end. And it has, because now a bunch of back-end investors that normally house loans and allow people to keep buying homes because we can provide more funds because we sell mortgages to them. Now they're saying, okay, well, we're a servicer of loans. So now if we're not going to be collecting payments for 6 to 12 months on how many millions of loans, a servicer still has to make payments to the investor, whether the homeowner pays them or not. So now all these lenders, these servicers of loans are saying, hey, I'm not lending anymore because now I've got a plan on a few million people saying I can't pay my mortgage for the next 12 months, and the government's backing them on it. So it sounds great to the average Joe, but to us in the mortgage industry, it's causing us havoc, because we normally have like 25 to 30 back-end investors that will bid on loans. And now we only have like 4 or 5. Like the other 20 to 25 are like, nope, sorry, but we're not interested right now unless the credit is fantastic, the down payment is great. So it really has changed our world. And I don't even think that bill is passed yet. I don't even think it's definite.
I'm actually concerned for some people that are not going to get the right information, because I called on 2 of my loans right now, and the one bank is not willing. They're willing to not let it affect the credit.
Mm-hmm.
Yet I could pay in 3 months. I could pay 3 months in one shot, and there'll be no penalties. There'll be no fees.
Yeah.
But at the same time, they're gonna expect their payment in 3 months. So I said, well, that's not really deferring it or pushing it off. And so for some people that are thinking, oh yeah, I heard I don't have to pay the mortgage, and then they go based on that,
Yeah.
we're gonna have some challenges with those people as well.
I've received some of those phone calls, and I'm just telling people, hey, that's not really my end of the industry, but that would be who's servicing your loan. So
Right.
if Atlantic Home Loans is servicing your loan, I can have someone talk to our servicing department, but it would be who's ever servicing your loan that would handle that question. And like you said, it might be different per lender, right?
Yeah, it is.
Depending on
It
the loan.
was in the two different banks. The one bank wasn't even there yet. They were like, we don't
Mhm.
know what you're talking about. And the other
Correct.
one said, sure, you could make on the third month, you could make all three.
Yeah.
Like, okay.
Yeah. Yeah. And who knows how it will even be rolled out. But yeah, that is causing havoc on my end right now, because right now the Federal Reserve has put in about $50 billion a day into buying mortgage rates lower. Right now, mortgage rates should be so much lower than they are right now, but they're not, because there's no appetite, because people are scared about a number of things, but that's one of them. So,
And where are you seeing the rates fall now today?
we're in the for loans under 510, for 510 or lower, we're in that like 3.25, 3.5 range for a 30-year fixed, quoting in the high twos for a 15-year fixed. It seems like there's less appetite for the larger loans. And those rates are in the high threes to fours for, like, anything above 510, above 765. There's the private sector is kind of shut down with that area, I guess. So, but yeah, it's still a fantastic environment, but not everyone. And if you don't have perfect credit, the rates would increase from like 3 1/8 to 3 3/4 in a heartbeat. So but which is still a great rate. I said that
Right.
to a customer today. You're at three. I'm offering you 3.875. You have 660 credit scores. Still a great rate, but if you had 740, you'd be down in the low threes. There's a kind of a big spread now because of the lack of liquidity, I guess. Yeah.
Yeah. And some people hopped on even under 3, which, what was that, a week, 2 weeks ago, maybe?
Yeah. March
And
6th. Yeah.
that was an
Yeah.
amazing opportunity.
Yeah.
And that's what people are remembering. And you're like,
Correct.
yeah, and we're in the mid threes and it's still
Yeah.
cheap money.
I've had a lot of people say, I can't believe these rates are so high, last week when I was quoting them 3 3/4. I'm like, you're basing that statement on what is not normal. March
Right.
6th and 5th were not normal. We don't see that once but every 50 years. So I guess we've never been in this type of situation either. So as a
No.
country, but Matt asked about the property inspection waivers, and that's been something that really, Fannie Mae and Freddie Mac did a phenomenal job of filtering that down almost immediately. When we run a loan through the National Automated Underwriting System, we run it through their system, and Fannie Mae and Freddie Mac tell us what documents we need. Well, I heard this weekend that they were going to be making appraisals a little easier for, probably not going to make it easier and get a property inspection waiver, meaning you don't need a walkthrough appraisal for the most expensive home in town. I haven't seen any of those, right? But I've seen people putting 25% down or more, or have 25% equity or more, that we don't need an appraisal. I've got 5 in the last 5 days of new deals coming in where we don't need an appraisal. So it was fantastic. And with everything that's going on, if you're secure with the value, even if they're off by 5%, when someone has 30% equity, it won't make a big difference. I thought that was a really smart move by Fannie Mae and Freddie Mac. It's making the process easier, and you don't have to have the appraiser be put in that situation, as well as the homeowner, So that's been a really good thing that we've seen. Now, it's not every deal. These appraisers are being creative, and they're wearing their masks and their gloves, and I heard one guy saying he told the homeowner to try and open the doors and windows as much as they could before he got there, which I thought was a really good idea too.
So one of the things I'm curious, especially this week where there's been so many changes over the week, what are some frequently asked questions you're getting from buyers or people that you're talking to on the phone? What are some conversations you're having that maybe we can help arm our agents in knowing, hey, this is what people might be asking you, and being able to support them in those questions?
Right now FHA pricing is a little challenging. If you're that FHA buyer putting 3.5 or 5% down, and you might not have the perfect credit, been very tough to see a 0-point option for those people. And normally you need to give them a rate with 0 points. But because of the lack of liquidity and just the concern of the investment community as far as the mortgage industry is concerned, that those people that might not have perfect credit and might not have the best qualifications that might be fitting into that, they might not, unemployment numbers were staggering this week, right? I mean, an average week of unemployment numbers was 275,000, 300,000. I mean, there were 3.2 million more unemployment claims last week, which was just staggering. So that's exactly why, my CFO sent me an email and he said, this is exactly why you're not getting good FHA pricing with 0 points. So that has been like a big disruption where, normally they don't have cash to pay a point or a half a point. So that's been a question. And then,
well, and time out on that, because if that knocks out a sector of our market, a sector of the buyers,
yeah,
we've seen that before, that, if you can't remember back in the day when there were so many adult communities that were built, there was like 20-year supply of adult communities. It actually backed up the whole chain, the whole domino effect of first-time home buyer to single-family home, the condo to single-family home and it just clogged everything up. So if we knock out the first-time home buyer out of the market, it's definitely gonna take out a link of our natural, upgrading. And
yeah.
And usually they're the guys that are gonna buy, and this is where our market is now. Some people, you might be seeing people want to leave Jersey after this, right? Or go to their retirement homes after this, live a better life after we get out of this lockdown. So when those baby boomers are leaving their house after 30, 40 years, who usually buys it is your first time home buyer, cutie patootie couple that gets, so we might see some disruption there.
Yeah. And there's no doubt that we need that first level of the ladder to be able to climb up so everyone else can move up as well, right? That is definitely a concern, but the concern of the investment community is this going to continue, and are we going to have 3 million more next week? And a lot of people, I was listening to an expert predicting that, for years we've been at like bargain basement low unemployment numbers, right? 3.5, I think we're at 3.5 as of February. But someone said if they did an unemployment number right now, they believe we'd be at 12 or 13%. So we've pretty much doubled or tripled inside of a couple of weeks, So that is what they're concerned on it. And I was just, right before I came on here, was talking to a customer who we were running numbers for, and he's in auto sales and he's not working now. And I said, hey, we can run these numbers, but just keep in mind, you've got to be working at the time of the closing. And I said, are you an employee or are you unemployed? He said, I'm collecting unemployment, So I said, okay, we can run all the numbers, assume everything's good. And then we can close as soon as you start your job, really, as soon as you start working again and they confirm you're there. And then he said, okay, how long is that good for? And I said, well, that's a very good question, because we don't know how long this is going to continue, right? So and he's on commission. So once you start getting to someone who's commission, we take an average, right? So is it only a 30-day gap where he didn't have commissions? Probably won't make a big deal. But if it's a 90 or 120-day gap where he has no income, now that's going to severely affect the income that we have to use for him. So I said to him, we could probably start the application, but we really need to know that you're going to be on the job working within 40, 45 days, because, if you're on the job 7 days before closing, we can do that, and you're working again. So and he and I don't know, we don't know when he's going to be back. So you would think 45 days is kind of a toss-up right now, right? Hopefully we'll be up and running by 45 days, but you don't know.
Not,
exactly, right? So that's a tough call.
Now, Shane, so I know Mary Beth had another overlapping call with ours, so I know she has to step up, but I wanted to keep you here because you've been providing a lot of great information and great content. And one of the things I was thinking of, while Mary Beth exits out, is just how long have you been in the mortgage industry?
So I've been in the mortgage industry since 1997, so 23 years. I've been in Atlantic Home Loans for 17 of those years.
So I guess my question as I'm talking to you, so you've been in this now a little over 20 years. How does this compare with previous, disruptors that we've had in our past since
Yeah.
you've been in the industry? How does this compare to that? What's different? What's the same? What challenges do we have? What are you seeing?
I see two milestones when you say that. September 11th and 2008,
Yep.
right? September 11th was, I think, disrupted. The difference between that was that disrupted Wall Street, right? It hit Wall Street at its epicenter, but it didn't really shut down Main Street, right? Main Street meaning the businesses that you see on up and down Route 23, and the businesses that you see in downtown, like, Wanacue or Riverdale, they were still running, right? They might have been hurt. Unemployment probably increased, but they were okay. 2008, same thing. Wall Street kind of caused that, with playing around with subprime and everything that got into it. But it didn't affect Main Street. It didn't shut down Main Street. Main Street was still running. Now we have Wall Street in an erratic behavior, which is kind of dictating a lot for us, but Main Street is totally shut down. So I haven't, and I don't know too many of us that have been in this type of situation other than maybe a wartime, right? Yeah. That they've been through a scenario where Main Street has been totally shut down. And, you can't go to your local, hardware store, local restaurant, and sit down and have lunch, maybe you can get takeout if you're lucky, but that's about it,
These are very unique times and very unprecedented in a lot of ways.
Yeah. And for the mortgage industry, the last downturn we had was 2008, where like everything changed, right? Our programs were rewritten, we went from giving someone a mortgage where you didn't have to get their pay stubs, W-2s, bank statements or anything like that to, okay, now I've got to start asking for that again. And we had to beef up our staffs in the office because they didn't collect half of the documentation they have to collect today, right? Yeah. So now we don't really have that. I think the biggest change for us has been everyone's working from home.
Yep.
And it's a matter of, is this person working in a sector where they're not working now and they might not be working down the road? The people who really lost, the type of buyer that really lost in the last downturn was self-employeds, right? They got a mortgage so easy in 2004, 5, and 6. If you were self-employed and owned your own business, they lost in 2009, 10, 11. Because now the name of the game for that previous decade almost was don't claim any taxable income, and you can still get a loan just as much as the guy who works a W-2. Yeah. So if you were ever going to have a business and be self-employed, 2001 to 2007 was the perfect time to do it. And you could buy probably 8, 9, or 10 homes sight unseen at the same time, right? Yeah. As long as you sold those homes by 2006, you probably did very well.
Yeah.
But in this scenario, I think the self-employed individual right now, and for as long as we're shut down, has an advantage because we go off of their tax returns. And how can you unless someone owns a luncheonette or a restaurant, how can you really make a claim? I mean, almost everyone's income is going to be affected, right? I've talked to my CFO, and we're going to look back at this, and we're going to see ripples of this 24 months, 18 months from now, because you're going to look back and look at someone's income from 2 years ago, and it's only like, oh, well, that was 2020. Yeah. Hopefully underwriters will push it aside and say that's an anomaly. Yeah. But we're going to see these ripples. But for the self-employed person, they really have it good right now because you're self-employed. As long as you show your last 2 years or tax returns, and you don't get an underwriter that kind of thinks, well, this guy's shut down, he's not making any money, you have to approve them. Yeah. So they have the upper hand over the W-2 employee, which it was the opposite in the last downturn. Any W-2 employee is probably affected by this unless they can work from home like me or maybe a pharmaceutical rep or somebody like that. They are still working. I know I met my buddy down the street. He's an area manager for a pharmaceutical company, and they're still working, 6, 7 hours a day. They're just not visiting doctors. They're trying to keep in touch with them. Right. So it's pockets that are being hit, but the hardest hit pocket of home buyers and borrowers was self-employed. And now they're pretty much okay,
Yeah.
So
Well,
So that's been good.
yeah, no, and I think another thing that's kind of interesting that Mary Beth and I have been talking about is just how the real estate industry may now change for good in the sense that like we've been pushing towards this technology driven world where we're pushing people into like our CRM, KW Command, all of that type of stuff. And some of the things that are coming out of this that we're doing virtually may actually extend beyond
Yeah.
this shutdown. So I'm
Yeah.
curious, in your world, are there things that you're seeing that, now that we're in a shutdown, you're like, oh, wow, okay, maybe this is some things that will actually still be in effect even after
Yeah.
things lift?
Yeah, I think Zoom is, I've discovered Zoom during this, right? There's a lot
Yeah.
of people in our company that used it prior to this, but
Mhm.
I'll use it, a lot in the future,
Yep.
And I think people working from home will be tremendous. My CFO and I had a long conversation about, he thinks this whole episode is going to bring down the cost of college tuition
Mhm.
because he thinks online classes are going to get a spark after this.
Absolutely.
Because we're seeing that, why can't I take a class like this?
You
Why
can
not?
do it. Yeah.
It's totally fine. Why
Yeah.
do I have to get up and go to class when I can take a class just right here?
Mhm.
Which I have 3 kids under 14, so I'm hoping that he's right on that estimate.
Yeah.
But you're right. I think it's going to change things for us. I think for our industry, I think you can do business this way, but it's certainly not ideal, right? I mean,
Oh, yeah, absolutely.
for me to get out and actually see the market and see the inventory and meet with realtors, home buyers, and attorneys, you can't beat that. Not via anything that a computer can give you, but you can certainly get by, right? We can get by for the next 30 to 60 days and still do business. But it's certainly ideal to be able to take a client through a home and explain, hey, you see that, you smell that in the basement, you know what I mean? So
Without a doubt.
but we can get by, that's for sure.
No, absolutely. And so I guess, as we're coming closer to the 1:30 time,
Yeah.
what's like one thing that you want us to take away from this call? What's one thing you want to deliver to our agents? I want to leave the floor to you to kind of close out today's call.
Yeah, if you are doing business, as a lot of us are trying to, but if you are doing business over the next 30 to 60 days, like I'm going to be doing Facebook lives, and I'll be doing these presentations on the Zoom meetings, but just keep plugged in, because it has not been uncommon that I think every day for like the last 10 business days, we've had at least 2 rate sheets. So meaning I get a rate at 11 a.m. and then at some point in the day, it's higher or lower.
Mhm.
So if you're a buyer, or if you are refinancing, or anyone looking to refinance out there, it's really a matter of just monitoring it and catching it at the right time, because later on in the day, it could be a 0.25% higher. As soon as the Federal Reserve leaves the market, rates could be higher. And it's really not the mortgage rep trying to pull a bait and switch. That's just how erratic the mortgage market is. So I tell people, I'm like, okay, here's the rate at 11 a.m. If you're interested and we want to lock it in, please call me immediately. Like, let's do it right away, because by 3 p.m. It easily could be 1/4 to 3/8% higher.
Yeah.
Because of just big market swings. So you just have to watch it much closer than you had to in the past.
No, that's very helpful, and I think you've provided a lot of great information for our agents today. I know our plan is, at least for the foreseeable future, to have this be a regular Friday thing.
Okay.
Same time, same link. This way, updates, every week you can provide them to our agents. So
Okay. Sounds good.
we look forward to having you back again next Friday.
All right. Thank you. Call me
Thank you.
if you need me, guys. I'm locked at home, so if you need help on the weekends or weeknights, let me know.
Great. Thanks, Shane. Have a great rest
All
of your day.
right. Talk to you guys.
Great.
Bye.
Bye, Shane.